Imagine opening your mailbox one day and finding a letter that says your taxes are about to go up significantly. Sound alarming? Well, the upcoming election could make that scenario a reality, depending on who wins. The decisions made at the ballot box this year could directly impact your income, your savings, and your financial future. Here, we'll break down exactly what you need to know about how Trump and Harris's tax plans might affect you. You'll learn what's at stake, how these changes could impact everything from your paycheck to your retirement, and what you can do to prepare. Now, you might already know that taxes are a big deal in any election, but what you might not realize is just how significant these changes could be for you personally. Whether you're worried about your income tax, corporate tax, or even taxes on things like Social Security, the policies proposed by these two candidates could have a real impact on your financial situation. And what's even more interesting is that while both candidates are proposing changes, they're going in very different directions. So, stick around because we're going to break it all down and see what it could mean for you. Alright, let's start by looking at former President Donald Trump's tax plan. Trump is aiming to extend the tax cuts that were part of the 2017 Tax Cuts and Jobs Act, also known as the TCJA. If you remember, this act brought in lower federal income tax brackets, a higher standard deduction, and a bigger child tax credit, among other things. Now, these benefits are set to expire after 2025, which means that without any action, taxes for more than 60% of Americans could go up. Trump wants to prevent that by keeping these cuts in place. He's also talking about more tax cuts for families and small businesses, which could mean more money in your pocket if these proposals go through. But here's the catch: extending these tax cuts isn't cheap. The Bipartisan Policy Center estimates that doing so could increase federal deficits by nearly $5 trillion over the next decade. That's a lot of money, and it's something to think about when considering the long-term impact of these policies. In addition to that, Trump's economic plan includes some pretty significant tariffs. He's proposing a baseline 10% tariff on all imported goods and a 60% levy on Chinese goods. These tariffs are essentially taxes on imports, and while Trump argues that they'll generate revenue from foreign countries, some experts warn that they could end up costing American consumers more, as companies might pass on those costs in the form of higher prices. In fact, the Tax Policy Center estimates that Trump's tariffs could reduce the average after-tax U.S. household income by about $1,800 in 2025. On top of that, Trump has mentioned his Project 2025 agenda, which includes more tax cuts. Under this plan, he's proposing to slash the corporate tax rate even further, down to 15%, and simplify the income tax system by reducing the number of income tax brackets from 7 to 2, with rates of 15% and 30%. This flat tax approach could make filing taxes simpler, but it also raises questions about how it would impact government revenue and services. But let's not forget about Trump's proposal to eliminate taxes on Social Security income. This is a big deal, especially for seniors who rely on Social Security as a major source of retirement income. According to a recent poll, Social Security is a key issue for voters this election, so it's no surprise that Trump is focusing on it. Eliminating taxes on Social Security could mean more money in the pockets of seniors, but it also raises questions about how this would affect the overall Social Security program and federal revenues. Now, let's talk about Vice President Kamala Harris's tax plan. Harris hasn't directly addressed the extension of the TCJA cuts in her campaign, but she has made it clear that she does not support extending these cuts for individuals earning more than $400,000 a year. Instead, Harris is focusing on increasing the corporate tax rate from 21% to 28%. This is a significant increase, and it's expected to bring in an additional $1 trillion over 10 years, which could help reduce the federal deficit. However, it could also mean higher costs for businesses, which might get passed down to consumers or affect jobs and wages. Harris's economic agenda is all about creating what she calls an opportunity economy, which focuses on providing more opportunities and economic security for middle-class Americans. Part of this plan includes restoring and expanding the child tax credit. She's proposing an expanded child tax credit that could provide up to $6,000 in total tax relief for families with newborn children, which is a big bump from the current credit. This could be a real help for families struggling with the high costs of raising children, especially in those early years. In addition to that, Harris is looking to expand the Earned Income Tax Credit, EITC, which is a tax credit for low to moderate income working individuals and families. Harris's plan would resurrect a more generous version of the EITC, similar to what was provided under the American Rescue Plan Act in 2021. This could be a significant benefit for workers without children who don't typically receive as much from the EITC. Harris's plan also touches on health insurance. She supports extending the Affordable Care Act's insurance premium subsidies, which were made more generous under the American Rescue Plan. This means more Americans could continue to receive affordable health insurance, which is a key part of her agenda to lower healthcare costs. Another interesting aspect of Harris's plan is her proposal to address rising food prices. She's proposed a federal ban on price gouging, focusing on stopping excessive price increases and curbing unfair mergers and acquisitions in the food industry. This is aimed at protecting consumers from what she sees as predatory practices by big food corporations. Speaking of taxes on tips, both Trump and Harris have floated the idea of eliminating income tax on tips. This could be a big change, especially for those working in the service industry who rely heavily on tips. However, there's some debate over how practical this would be, with concerns about potential administrative challenges and the risk of abuse. When it comes to affordable housing, Harris has laid out a number of proposals as part of her broader economic agenda. She's pushing for tax incentives for homebuilders to build starter homes for first-time buyers, offering up to $25,000 in down payment support for first-time homeowners, and expanding tax incentives for businesses that build affordable rental housing. These initiatives are designed to make housing more affordable and accessible, especially in a market where prices continue to rise. Finally, we should talk about the broader context of these proposals. Both Trump and Harris have very different visions for the country's tax system, and the outcome of the election will have a big impact on the direction we take. Trump's approach is all about maintaining and expanding the tax cuts from his previous administration, while Harris is focused on raising taxes on corporations and the wealthy to fund programs aimed at supporting the middle class and those in need. So then, what does all of this mean for you? Well, it depends on your personal situation. If you're a middle-class family with young children, Harris's proposals for an expanded child tax credit could be a big benefit. But if you're a small business owner or someone who benefited from the TCJA cuts, you might prefer Trump's plan to keep those in place. And, of course, we can't forget the bigger picture. Both of these plans come with trade-offs. Trump's plan could lead to higher deficits, which might have long-term consequences for the economy. Harris's plan could lead to higher costs for businesses, which could affect jobs and wages. So, it's important to consider not just how these policies might affect you directly, but also what they mean for the economy as a whole. Now, I know this can all seem a bit overwhelming, but remember, the key is to stay informed and think about what matters most to you. Taxes are just one part of the equation, and it's important to look at the whole picture when deciding which candidate's policies align best with your values and financial goals. So, what do you think? Do you have a preference between Trump's approach to taxes or Harris's? I'd love to hear your thoughts in the comments below. And, if you found this helpful, don't forget to give it a thumbs up and share it with your friends, since staying informed is one of the best ways to make sure you're making the right decisions for your future. Thanks for watching, and I'll see you next time.